Early December last year, we thought S&P could reach 5,200 this year. And we're going to be making a lot of new highs over the next 5 years anyways.
Tom Lee famously just predicted a 15,000 point S&P 500, so I dug deep into his research and I'm about to unveil to you his top 5 stocks. But first, let's understand why these stocks are poised to ride the AI wave to unprecedented heights. Today, we're diving into the AI revolution and the 5 stocks that Tom Lee believes will lead the charge. I will also show you the latest dark pool trades on these stocks and how to access that information yourself. Tom Lee, the managing partner and head of research at Fundstrat, has a track record of making bold market predictions. His latest forecast, the S&P hitting 15,000 points by 2030, driven by explosive growth in AI. AI is transforming industries at an unprecedented pace, from tech giants to financial institutions and from networking solutions to aerospace. AI is the driving force behind innovation and efficiency right now. But which companies are at the forefront of this revolution, according to Mr. Lee? Well, to understand the potential, let's look at some key sectors that are shaping the future. These aren't just about cutting-edge tech, they're about creating real-world solutions that actually drive growth and profitability. But before we dive deeper, imagine for a moment how much money you could make if you knew exactly what stocks to buy and when, and if you had automated your profit-taking and your risk management. Well, that is exactly what I've developed over the last 10 years or so. And so many of our European viewers, like this one here, have asked me for a final live trading. So I'm teaching that entire system to 500 lucky people for free on Tuesday at 10 a.m. New York time or 3 p.m. London time. All you got to do is head over to felixprehn.org/webinar, grab yourself a free seat, and you can be part of those 500 if you're quick enough. Now, 5 companies stand out with their diverse portfolios, strategic positions in this AI landscape. These companies are investing heavily into AI R&D, with projects ranging from autonomous systems to advanced fintech, and we will walk through their positioning before the big reveal, so stick around. Imagine a world where machines can see and understand like humans, where financial decisions are made with unprecedented accuracy, where networks are self-optimizing, and where aerospace tech pushes the boundary of what's possible. This isn't science fiction, this isn't 2030, this is actually now. The future being built by our 5 mystery companies. Financially, these companies are powerhouses with market caps ranging from tens to hundreds of billions. They have the resources to invest in long-term AI projects, and their revenues from AI-driven products and services are growing exponentially, contributing to their bottom line. Let's take a closer look at these 5 and their key AI initiatives. Mystery company number 1 is a tech giant that's revolutionizing search, cloud computing, and autonomous systems. And their AI projects are pushing the boundaries of what's possible with machine learning and neural networks. The AI research division has made groundbreaking advancements in NLP, computer vision, and reinforcement learning. They've developed AI models that actually understand and generate human-like text, translate in real time, and even create art and music. In healthcare, this AI company is assisting doctors in diagnosing diseases, predicting patient outcomes, and much more. They're helping in drug discovery, and in autonomous driving, their project has logged millions of miles in real-world self-driving conditions. And let's not forget the AI-powered voice assistant. Now, you might have an idea who that stock is right now. It is financially a behemoth. It has a market cap of $1.5 trillion, which kind of gives it away, and bring in about $200 billion in sales a year, and they're investing very heavily into AI. Their cloud division which already leverages AI, has been growing impressively and contributes to their bottom line. Stick around for the big reveal. Company number 2 is at the forefront of AI-powered graphics and computing. Their chips are the backbone of modern AI systems, powering everything from gaming to scientific simulations. I think that was a pretty big hint, wasn't it? This company's GPUs have become the go-to hardware for training and running AI models. They've developed specialized AI chips that are orders of magnitude faster than traditional CPUs and most competitors. Their tech is being used for autonomous vehicles, robotics, and creating digital humans for movies and games. Yes, your favorite actor will be an avatar in the future. They're also making significant strides in AI for healthcare, developing platforms, medical imaging, analysis, drug discovery, and a whole host of service offerings. And in the whole realm of scientific computing, their GPUs are accelerating research like never before in everything from genomics to particle physics and the metaverse and much, much more. Now, financially, they've seen explosive growth, and I really mean explosive. Their market cap is above $1 trillion, annual revenue approaching $30 billion, and their AI-focused data center business has been the key driver of that, revenues doubling year over year. You might have a pretty good idea what that company is, right? Guess it down below in the comments and don't cheat. Now, company number 3 is transforming the way networks operate. Their AI-driven solutions are making networks smarter, more efficient, more secure. And this company's AI-powered networking solution is completely revolutionizing how data centers and cloud infrastructure operates. Their systems can predict network issues before they occur, automatically optimize traffic flow, and defend against cyber threats in real time. They're also at the forefront of developing networking solutions for AI and machine learning and workloads particularly. So their high-speed, low-latency networks are essentially crucial for distributed smart AI training. And in this whole realm of edge computing, their AI-enabled devices are bringing intelligence, like the way you and I think about it, closer to where data is generated, enabling real-time decision-making for autonomous vehicles, smart cities, and so on. And financially, they're doing pretty well. They've got a market cap of 50 billion, revenues of more than 4 billion, and have consistently outperformed market expectations with their focus on just high-performing networking. I think they are actually very well positioned to capitalize on this AI boom. Hard to guess that one, wasn't it? 2 more, though, and then we'll do the big reveal and we look at market positioning and dark pools and everything else. Stock number 4 is a financial powerhouse, and it's not who you think. They leverage AI to revolutionize banking and investing. The company is using AI to transform every aspect of its operations. Fraud detection. They now analyze millions of transactions in real time, identifying and preventing fraud with an unprecedented accuracy. The AI-powered trading algos are making split-second decisions in the stock market, optimizing investment strategies and managing risk. And in consumer banking, the AI chatbots and virtual assistants are terrifying customers. Well, apparently it's a great thing, but who actually enjoys an AI chatbot? You got to ask yourself that. But anyway, they're using AI for credit scoring, apparently to make those decisions better. In wealth management, they're using creating personalized investment portfolios, risk profiles, financial goals, and so on. And these guys are financially the giant in the banking sector. Market cap is 400 billion. Annual revenue is over 100 billion, and they've got all the money. Their tech budget is $12 billion annually, a significant portion of which is going into AI and machine learning. quite an easy one to guess, I think, for somebody familiar with the financial space. But let's round up stock number 5 before we do the big reveal here. So our final and 5th company is pushing the boundaries of what's possible in aerospace and defense using AI. They are leveraging AI to revolutionize aerospace manufacturing and operations. They're optimizing aircraft design, reducing fuel consumption, and improving overall performance. In aircraft maintenance, they're using predictive AI models to anticipate failures before they occur, therefore significantly reducing downtime and maintenance cost. And they are also developing autonomous flight systems that could transform both military and civilian aviation. No more pilots. Sorry, pilots. Pilots, by the way, make great traders. It's true. You guys are very rules-based, which is fantastic. Now, for defense applications, they're also using AI to enhance just general situational awareness, improve target recognition, and develop their own autonomous AI systems. And they are also being applied to space exploration, helping to navigate spacecraft and analyze data from distant planets. Now, financially, this company is pretty impressive. Market cap is 30 billion. Annual revenue is over 5 billion. So they're a key player in aerospace and AI. And they have very good margins. They're focused on proprietary technologies, which has allowed them to have pretty much the best profitability in the whole industry. So here's the big reveal. Which companies are behind these 5 incredible sounding AI advancements? It's time for the drum roll. The companies we have, and I'll pop it on the screen here for you: Google, nvidia, Arista, JP Morgan, and Transdigm, if I'm pronouncing that correctly. And that's probably a little bit hard to discover some of these on your own. So these are Tom Lee's top 5 AI stocks. Now, let me show you what the actual, how we score them in terms of performance. So I've got on this chart here the stocks, I've got cash flow, growth, health, and so on. And I'm just going to walk you through that. So in terms of school grades, right? A is the best, D is the worst. Google, nvidia, Arista, JP Morgan, all coming out the same. Transdigm, not same grade flow of cash. Growth, Google's doing well, nvidia's doing well, Arista's doing well. JP Morgan actually pretty extraordinary with an A there. Transdigm, it's just a student in the last row in the class, isn't it? They're just trying to keep their head down. Price momentum. Now this is a little misleading because do you want high price momentum? It depends, doesn't it? If you're looking for a bargain, none of these stocks have like massively underperformed the market. They've all been very much in line with market leaders. But they are very profitable. A for Google, A for nvidia, A for Arista, A for JP Morgan, and the B for Transdigm. And which of these is a cheap stock? Well, let's look at value. So Google comes out as pretty expensive. I would argue that Google has got a long way to go. And I think the F is probably a little harsh as a fail. But these are what you will find on pretty much every company with a high profit score. There's E, there is F, right? So Google, maybe it's a little expensive, but the other 4 are actually looking quite appealing. And why is that? Well, they've got diverse AI portfolios, they've got cash flow, and they're established. So I can understand why Tom Lee has picked these 5 as his top plays in that order. But let's have a look at entry points and if Wall Street is buying or selling these. So we're going to head over to TradeVision, which is a platform that we're building to make financial data available to you and give you the same information edge that Wall Street has. And the first thing would be, well, let's look at Google. Okay, so if you look at the Google chart here, it's a long-term uptrend, isn't it? It's been there for a long time. So the first thing I always look at is toggle our little trend indicator on because it's insanely good. And it tells you, are you in a red zone, a green zone, as in like where's momentum heading, right? And it's been incredibly accurate if you look at the background here. Maybe you pause it and have a look at that. And then we're looking at where we are right now. And we're still moving along this uptrend. In fact, we're on a accelerated uptrend. Now, it's possible that we might come back down, I think, to this uptrend and then sort of rebound like we did We get a pen like we did up here, right? We sort of, the market zigzags, right? So we're zigging, we maybe be zagging a little bit. That's fine. But overall, it still looks very, very bullish. So as an entry point, it's not like it's looking cheap. It's trading at pretty much all-time highs. So the question, therefore, is simply one for you of how long is your time horizon? Of course, this is not financial advice. I'm not telling you to buy these. But if your horizon is long enough, a company that compounds and grows like Google is likely to generate investors' money in the long run. The second thing we look at is smart money trades. So this is Wall Street's hidden world of private exchanges and dark pools where they do whatever the heck they want without you and me seeing it, except we pay to get the data and we share it with you. Here it is. So if I look at the last Google trades as I'm recording this, there are a lot of bearish trades here, but have a look, a little bit of a closer look. They're selling call options at $105, $100, $105, $175. And as they exited those trades or sold those call options, the ticker price, the stock price was 180 plus. So all of these trades were probably profit taking. People were just making a lot of money and they're taking the money off the table. And then if you look at the two trades below that, well, people are buying call options, which is actually quite bullish. So it's probably a lot more bullish than it looks. So I think Wall Street seems to like Google. So here is NVIDIA. We've gone through a big green, beautiful zone up. We're a little bit of a consolidation phase. That's the way I read it, which is actually quite a nice entry point, possibly. And we have some resistance at 130 here, which is that green bar there that indicates resistance at 130. It obviously all hinges on their earnings and them beating market expectations sufficiently so the market keeps going. I think the innovations that they're bringing out in their new chips, next generation and so on, getting faster and faster so much that people are going to replace their existing inventory with it and their existing chips with it just to keep up with the Joneses or the Zuckerbergs. And therefore, I think they're likely to have another good year ahead. What happens after that? Who knows? But I think for the moment they have the lead. I think the stock's likely to continue to go up. That's my particular view on it. Now let's have a look at what is Wall Street doing in its private little secret back rooms where it trades. And yesterday, again, a lot of call options being sold. But let's just look at the largest trades. That's always a good thing to do. Just look at the biggest trades you've got. And you then again want to look at like, okay, we're selling a $100 call option, but the stock was trading at $123. So they're taking profits, right? Profit taking. It's not really a problem. And here is a bullish call option. And this is profit taking, profit taking, profit taking, profit taking, profit taking. And then you have two bullish trades. So actually, the market looks quite bullish. And we are rejigging this to make this easier to read for you, by the way. So this is going to improve over the next couple of weeks. So NVIDIA, the market likes it. I think, yes, we've had some hedge funds take profits, but the market still very much likes it, the way I'm reading it. Arista's had a pretty nice uptrend. We had a little bit of a dip here, which our indicator in the background called very, very nicely. That was a very nice trade down. And then we went bullish again, which we called very nicely. And then we zagged down again and we called that very nicely. Right now, we're still in bullish land. So you could argue that there should be a correction due at some point because the stock's very, very volatile. That's obviously speculative, but yeah, you could say, well, I'm only going to buy the dips. So actually, when the indicator turns red, maybe you'll be a contrarian. That would be a fair thing to do. I don't think there is a lot of trading on this one by institutions, but let's have a look. Only two trades here in the last week. Both. This is definitely bearish, the first one, the 1.2 million trade. This one here selling a 330 call. When the stock market's trading above, that's actually, again, a profit-taking trade. So, yeah, mixed, not particularly glorious. It's just not enough data, really, because Arista not that widely traded. JP Morgan, also a beautiful rally here since November. We were trading at 136. Now we're trading at 209 or 210. So very, very nice rally. It does have its dips here, and you can see we again caught those very nicely. But right now we're definitely on a tear. very nice rally, exceeded all the previous resistant lines here. So there isn't really anything holding this back. Therefore, again, if you like it, I don't think waiting is necessarily going to make it any better. Obviously, the decision to invest is entirely yours, and you've got to do your own research and so on. My intention here is just to give you a little bit of a leg up. If I look at the biggest trades here in the last couple of days, selling call options that made a lot of money. We can kind of ignore those. So mostly it's profit taking. People are just going, this rally has gone on for a long time. Why don't we take some profits? That's really what's going on here. So yet the market's still going up, right? The market's still going up. Okay, so we've got a beautiful rally from 830 to 1275. Well, I say beautiful rally. We do seem to be plateauing up here. And then actually now coming down, and we called a sell signal here the last 5 days or so, despite the recovery candle there. So it actually looks a little bit bearish right now. Now, does that mean it's going to go much lower? Well, one thing we could look at would be a longer term, like a moving average line. And we're actually below the 50-day quite significantly. When was the last time we've done that? Last time we done that was sort of our consolidation here in October down here. So could be a good entry point. We're below the 50-day. We haven't done that, as I say, in about 10 months. So it could be an interesting entry point. I don't think there'll be any institutional trades on TDG, but I could be wrong on that. No, at least nothing big. Let me see all sizes. Yeah, not a lot. The trades are really too small to be super relevant. So all of these stocks have seen impressive growth. But with their continued AI push, the potential for future gains is enormous. So for investors looking to capitalize on the AI revolution in a more diversified way, these could be stocks you might want to dig a little bit deeper into. I thank you for watching. If you found this video helpful, maybe even insightful, maybe slightly frustrating because I dragged it out a little bit too long, make sure you like and subscribe to the channel. And down below in the comments, let me know which of these AI stocks you are most interested in. Make sure you also come and join me on coming Tuesday for the last European timed webinar, 10 a.m. New York time, 3 p.m. London time at felixprehn.org/webinar. And I teach you my 3-step system that allowed us just last month. We made like 18%, for example. So if you want to learn how we do that, then come and join me over there. I thank you for watching. I thank you for tuning in. Welcome to Felix and Friends, where we are not just predicting the future, we are sniffing it out like my trusty sidekick Winston on a squirrel hunt. And speaking of hunting, today we're tracking down something much bigger than squirrels. But before we unleash our financial mud-digging instincts, I want to share